What's up, ladies and gentlemen? You're watching the Stock Market Beef Show. We're going to talk about the things that matter going into tomorrow. Yeah, we got the elections going on. Yeah, we got that core inflation data coming out. And let me tell you, 6.5 consensus for the core, 8% over here too. There's some interesting data coming in that's showing there's nowcast that's coming in around 8.1, so hotter than expected. So there's reasons to believe it can come in hotter than expected, which could very well set the market, more turbulence. But there's also some other data showing that it could slow down. So it's a very binary event. We got to be careful and see how the market wants to interpret this data. Now, if we look at how the market prepared itself or finished itself for the day, we have the 11 sectors, only one of which was in the red, the pesky little consumer discretionaries. Not really little, it's one of the bigger ones. Dow Jones was up 1%, S&P 500 0.5%, so everything was green on the day, including the VIX. But if you really dig into the data and look at a minute-per-minute basis over here, let's say the ES, this was a wild roller coaster of a ride. We started off the day, yeah, we're going up, we're flagging, yeah, going up and flagging, yeah, going up and flagging. And then we're like, yeah, we're just going to pin it for the rest of the day. And then out of nowhere, boom! And then out of nowhere, boom! Right, we had some big turbulence with the whole FTX debacle with Bitcoin getting completely crushed. If you take a look, though, some interesting stuff on the 15-minute time frame. We just pulled down into really rather a neutral 5-day moving average, and we managed to find support right there for the SPY. Now, if you take a look at the weekly expected move, we're not too far off of it. So maybe if we get some decent news, we get to pop right up into that level. If you take a look at the Qs, we're in a bear flag structure, not too far also from that upper weekly expected move. And even if price were to get up there, we're still kind of within that bear structure. So always be open to the possibility for that breaking down. If you take a look at IWM, we are in a bear flag structure there too as well. And you can see it also tagged that 5-day moving average. It's still declining and we're still above it. You can see here the Qs did the same exact thing, okay? Crazy, crazy, crazy stuff. Now we had Disney, one of the bigger ones, report earnings after hours. We were below that declining 5-day moving average. It was kind of flagging or broadening wedge. And then how did it happen? What took place? Well, after hours, it got completely smashed. Earnings expected move was around $8, so plus or minus $8, and we did just that. Now, if we pay attention to the most important thing going into tomorrow, it's going to be the weekly expected move. Sorry, not the weekly expected move, the expected move around the core inflation data, and also the expected move for the elections and so forth. So yes, overall, the market's still in a downtrend and we're starting to bounce up. A lot of people are calling for the melt up, right? Okay. But my question is this: if that's a melt up, what was this? And what was this? And well, what was all of 2022? So this to me just looks like a bear market rally. And it's just a rally potentially putting in another lower high. So even if we were to come up to 4,100, that's still below a declining 200-day moving average. Okay, so if we take a look, zoom in, let's take a look at the expected move going into tomorrow. We're looking at plus or minus $50. So quite a bit of turbulence, looking at a 34%, 34 vol right there. So yeah, what does that mean? It means these orange lines, we can potentially go to either side. So where's that? That can bring us right up to that weekly expected move and potentially break down to around that 20-day moving average. Now, remember, if we get some volatile price action or the market interprets it as, significantly worse or better than expected, there's always the possibility that we do 2 standard deviations or 2 sigma move. We've seen it before, okay? So if that does take place, yeah, we can come right back down to 3,700. That would be around a 2 sigma move to the downside, or we can come right up here to around just 3,900 marker level again as well. Okay, so we'll keep an eye on those levels. If you look at this does kind of look like it's kind of like flagging right here, right? You see these, long range candles, and then all of a sudden the body on this candle is getting a little bit more narrow, kind of a high wave, sort of a indecision type candle taking place here. So we'll see if we can get a break to the upside of the high of day or the low to potentially get a good idea of where direction may be. Keep an eye on this trend line, obviously, right here too as well, right? These little trend lines. All little tiny stuff taking place, but we got volatility. That's the big thing taking place. Now, another one to look at is the dollar. The dollar came down to its lower trend line here. We had this little fake out move. And yes, people are calling for the dollar. It's over. It's game over for the dollar, right? The top is in. Are they right? Could they be right? Absolutely. We can't rule that out as a possibility, but also to note, this could just be consolidation. You can't rule that out either. You can't make huge trading decisions based off stuff that you don't actually know to be true. So if the dollar starts actually moving up from this point, what's going to take place? Well, the S&P 500 could obviously get cracked. So if the market doesn't like the data that comes in tomorrow and it says, hey, let's go long dollars again, the dollar can go up and that can bring down the S&P 500. Why would it bring down the S&P 500 and other various assets? Well, because there's been a very strong negative correlation. We keep talking about that. I posted this into my Patreon group earlier. I said basically the dollar is getting crushed. Right out of the gates, the dollar was. So I said, look at the zone level, which are the zones that I share there, around 109 to 109.50. Well, the dollar went down into that 109.50 level. And if you remember throughout the day, right around this point, when the dollar hit around that 109.50 to 109.40 level, all of a sudden the dollar started spiking. And what happened to the S&P 500? It got ripped to absolute shreds. But understand this, there's other assets that actually fell down at a rapid rate too, and that have been moving up. We're talking about silver, GDX. So honestly, if you look at actually GDX and silver, so miners and silver, they move hand in hand. Okay, if you look at a correlation chart, it's like a 1-for-1. Copper miners, also another thing, right? And copper's been going out. And then gold had another rally, right? It's been on this monster move. So if the dollar finds its legs, be very careful, because you're going to get a lot of late to the party type people getting into assets like these, not aware of what can potentially take place with the dollar. And if the dollar starts taking off, well, guess what? If you size these type of moves correctly to the downside, you can make for a great fade trade. Be careful and be aware of that. Now take a look at the UUP. We're looking at the weekly expected moves. We're coming down into the lower weekly expected move. Wow, what do you know? The S&P 500 is coming up to around its upper weekly expected move. So if the dollar gets crushed back down to this side, guess what? It's mattered. Remember we talked about it right here on the video? I hope you do. If you don't, go watch that video. If you're new here, well, make sure to subscribe so you can keep up to date on this type of stuff. We talked about it coming up to those areas. We said it's an important level. It's been important watching these. It did the same thing down here on the lower end and right here too. And guess what? It started moving down, and guess what happened to the S&P 500? It started going up. We were prepared. Take a look at the 10-year yield. The yield continues to just consolidate here. Look at these last 4 trading days or so as it broke out of this little tiny flag pattern. It's honestly been putting in some negative divergence. It's been slowing down. We'll see if it has some more upside. If this continues to rocket up, guess what? That's not good for growth. It's not good for tech. We've already seen the repercussions on a lot of these, non-profitable type companies, tech companies, just completely bursting during this earnings season. If you take a look at TLT, it's still in a downtrend. Clearly, it's in a downtrend, and it's getting rejected from that middle trend line there, as we pointed out prior, and now it's kind of sinking down below all those key moving averages. So we'll continue to watch this, see if it can, put in potentially a higher low and start basing out, right? So it could be something like this, where we came down, we bounced up, boom, we come down, put in a higher low, start breaking above. Maybe we can call that a potential double bottom right over here, and then it comes back up to the upper range of that channel. Always a possibility and something to watch out for. But just be mindful of the overall economic situation of what's taking place. What the Federal Reserve is doing is they're very hawkish. They're tightening into this slowdown, all right? That is the reality. They are hawks. And if you look at what's taking place in the yield curves, where is the Fed pivot exactly? I don't see it. Minus 53 basis points in the 10 and 2. The 10-year and 3-month is a minus 14 basis points, and it's just diving into this negative territory. These can continue to dive deeper, and, we've seen things like financials start to rally up, but trust me, financials will get hit eventually, especially if we continue to be in this type of environment. Now, if we take a look at smart money versus dumb money, a lot of people pointed this out today because, well, they're smart and they follow this. Smart money, the HYG, right, did not put in a higher high over here, and yet the dumb money did. So is that a indication going into this economic drop in these elections? Perhaps, but also note that if HYG starts catching a bid, that divergence will break. So it's something to be aware of and be mindful of. Another thing to look at is volatility has been getting absolutely crushed. One thing I pointed out into the Patreon group was take a look at the 5-day moving average. It's been tagged multiple times and it's still declining, but today we got a little bit of a rip, and you can see over here it closed right on that right above that 5-day moving average as it came up, and then it started pulling back into it and then found some support. So is this where the 5-day moving average is going to start flattening out potentially, and then we start getting some movement back into volatility? Be open to that possibility, okay? Now, another thing to look at is the summation index. I'm going to make a YouTube short on this one because I just love it so much. We talked about when the parabolic SAR ticked over here. We talked about when the parabolic SAR ticked over here, right? That's potential trend changes. And what we see here is the market moved down. During this trend change, were you ready? Boom, the market moved up. What do you know? It's amazing. Now, what I will point out here is that we do have a higher high in the New York Stock Exchange, right? So boom, boom. But we have a lower high right here as of now in the NYSE McClellan oscillator. So that could tell us that momentum, right, or the movement up here, yes, price is going higher, but the internals are actually getting weaker as it stands. Now, if we take a look at the summation index, it's still pointing straight up. So really, to feel more confident that the trend is going to turn back around, what do you want to see? Well, you want to see this start to turn back around, and you want to see this parabolic SAR uptick once again. Okay, we are still below zero, so that is still a negative sign, but it is, you know, it's making its work. It's moving around. Okay, now if we take a look at the zones, which I decided to share today as well, a couple of ones that I want to point out. There's a lot of 50-50 here going into this report. So, for example, the S&P 500. Well, there's 3% upside, 3% downside according to this calculation, which tells us what? We're going into a binary event. It's risk is kind of undecided right now, is what it's telling me. Okay. But there are a couple asset classes here that I find interesting. First and foremost is semiconductors. Semiconductors makes up a huge portion of the NASDAQ composite. And if you take a look at the upside potential versus downside potential, wow, man, 8% or 0.8% upside, 0.8, right, to potential 10% downside. Now, this doesn't mean it's probable, and it doesn't mean it's going to happen, but what it tells us is, hey, we got an asset class over here that's getting a little overextended. Sorry, I was pointing towards XME. I meant semiconductors, but I have XME pointed out as well, because this one over here has 2.3% upside, 10% downside. Now, XME is what? XME is miners, and we just recently talked about the miners in this prior slide, right? So if the dollar starts catching a bid, and silver potentially comes down too, well, guess what? Miners can get hit. We already talked about that correlation, and the dollar has a strong correlation to silver as well. Speaking of the dollar, you look at the dollar, you have 3% upside, 1% downside. That's 1 to 3 right there. So there's some big upside, some minimal downside. The low end of the zone currently is at 108.671, and then the high side is 113, okay? So that's what I got for you on today's episode, everybody. That's what I'm paying attention to going into tomorrow's trading day. Be careful, be safe, have a wonderful night.